Monday, December 11th, 2 weeks before Christmas. And the Santa Claus Rally is going to be starting the middle of next week. You guys know I start out with the stock market indexes, and again this morning. So you've got the E-mini Christmas contract making new highs for the trend by a very small amount at this point and holding on to it by a small amount. The problem is we have lost a lot of upside momentum, and we have just gotten above the resistance area a slight bit on Friday, and it's holding it at the moment today. If we were to flip-flop and turn back down again, it'd be a minor false upside breakout, and we really need to close below these lows for the last 2-3 weeks. That would kick off the decline into the buying opportunity for the Santa Claus Rally, which will be Wednesday, of next week. And I will detail the time of day and the days involved in the upcoming market analysis YouTubes. So, overbought conditions recently, not at the moment. Divergences, that means new highs in price, but not in the indicator. Yes. At or very close to previous important tops. Yes. We've got a variety of reasons, and there are others, to expect, which hasn't happened yet, a downside correction or, Now, how far down are we going to go? I think it's quite possible, although it seems like a little bit of a stretch in a week and a half, to get down to 4,420 something for the Christmas, December E-mini. Now we have to roll into the March very quickly because the Christmas is going to expire. So I'll stay with that statement. Next chart. We've got, the spider, of course, it's extremely similar, especially since the December is so close to expiring. And we're in a resistance area, but this time the SPY has actually made on Friday slight new highs completely since the bear market of 2022 started. And that goes all the way back to January of 2022. Now, that doesn't mean it's a super bullish signal. The problem is we are overbought again right now, today, just barely in the last hour or so. So now if we do have a bearish engulfing candlestick, we'll get a major sell signal, which I thought we had on Wednesday of last week, but it didn't work. Now, you guys who follow me know these signals are often the high of a move. Point blank, July 27th, October 13th, 22, and a whole mess of others. Here's a green one that's at the bottom of this particular swing. It didn't go very far, but it was very profitable. So this could be a prelude, and I think it is, to a turning point that is going to break the support at 453, excuse me, and a half, which will produce a move down probably to close this gap at 441 and a half. That's exactly what I think is about to happen in the next week and a half. Next is the 1-minute chart on the spider. We just spiked up and tested the high of the day a moment ago, and frankly, we're still there for all practical purposes. So I have no evidence, price action wise, that it's starting yet. The DIA is a new high ground and has been overbought for, a month almost. Yep, that's correct. Basically a month, which is highly unusual. We've had two sell signals. Neither one produced any profitable results. small losses. We get out and very quickly. Remember, our stops are always immediate with the ER signals technique. It's an automated trading system, 100% for TradeStation and NinjaTrader. So, overbought, new high ground. All I'm waiting for is a bearish engulfing, and I'll scream bloody murder. The move is beginning, similar to back here, for example, with an extra sell signal. Now, these are not necessarily the highest highs, but they forecasted a move to the downside, and that's basically what we're looking at. Not the highest high, not the highest high, and although that did work very nicely, it wasn't the highest high. And on the bottom, this was almost the lowest low, but it did work great. So this was the lowest low on its particular break. Next chart. Russell 2000, still coming extremely close to stopping us out of our previous short position. ER1 overnight and ER3 overnight, basically still in a short trade. The yellow dots represent the stop, STS smart trailing stop. The red dot is a representation of the new short sale price. So we have a loss. Not bad, not too bad, and it's just staying basically unchanged. Let's watch to see what happens. The Russell may have a great trade soon. I think it has a chance of coming back to closing this gap, which I've used a green rectangle on, but that is somewhat of a stretch. That's an awful significant ways down. So I'm voting much more toward this test of this support area right in here. And that's what I think is going to happen at a minimum. Next, QQQ, new highs, but not in the indicator, not overbought at the moment. Prime target for a reversal, but unfortunately, because it was not overbought within the allotted number of past days and or today, we're not going to get a red signal. We got one here. Maybe part of the topping out process. That's exactly what I'm thinking. Next, NASDAQ, December futures, testing previous highs, significant resistance. Kind of looks like it's trying to create a double top and a small double top inside of a larger one, maybe. And we need to close below that low. 15,711 would be a downside breakout sell signal, and probably create a move down to in the area of 15,200. Next, that's it for the indexes, and I'm going to go to futures. So S&P from another perspective, E-mini, Christmas contract. Now, actually, sorry, this is the continuation contract. So it is a little bit different. It does represent very, very nicely how the market is basically moving, but because futures, born and live and die, they have a life. The continuation is a perpetual of the various different individual contract months over time. And I like this very much. It helps me from an analytical point for a longer, much longer time frame than the individual contracts. What can I say? Everything I said before applies. Next is the NASDAQ continuation, right up against previous highs. Perfect spot, frankly, for things to turn south, but not yet. Looking very firm at the moment. But that's always it is. That's the way it is, always exactly at the high tick. Bonds have turned down now for the third day, Thursday last week, Friday, and then today again. And we are almost stopped out. In fact, I think the stop is 2 ticks away. So hitting 1:18:12, 30 seconds would push us out of the trade, and that hasn't happened yet. It's super close. Great trade, 10-year notes. We put our trailing stop a little bit further away. It is flexible to change the way this moves, which is not a percentage. It's not an amount from the high of the rallies. It is a combination of indicators and price action. So it's unique, and we call it the smart trailing stop. We are out. We are still waiting for a hit at about 109.06 in order to exit. So we're still long, losing a little bit of the profit on the 10-year notes. Next chart is crude oil. Got oversold in support, bouncing a little bit the last couple of days. I haven't got a lot of faith in this. No other comments. Don't know what to do at the moment. I wouldn't be short. Next, natural gas. I would definitely be lowering my buy stops to be into new long positions and or out of shorts. This is a downside exhaustion gap. It's pretty classic, frankly. And this market is primed to turn around. The oscillator, which is the RSI, my custom version, got down to below 10. Wow. We don't see that very rarely, maybe less than once a year. And this looks like probably that's true. This is the most oversold condition I think I have seen in a very long time. Oh gosh, I got to go back at least to August or maybe earlier to see this oversold condition. Now, a lot of people would think this looks super bearish. It's exactly the opposite. Next chart. Heating oil. Bottom of a wedge, dropped below it a little bit, popping back into it today. But that's a fairly good area of resistance. I got to be looking bearish at this, but I can't figure it out at the moment. Next. Silver, gold, platinum. Wow. I screamed a week ago, bloody murder, period. This is a great trade in progress, and silver's even better in a moment. Precious metals have been outstanding for us in general this year. We caught the bottom with a green, almost a high here. Now that's a bad signal, obviously. It says buy, but it was a very, very small loss because it opened way below the bid and got stopped out almost, right away, same day, maybe in minutes. That green one was the bottom of the break, and that's what the ER signals was built for. Top of the rally, not a good signal. Almost perfect, low of the break. Yeah, perfect. And the high in red, perfect. So just let's go to the silver. Look at this move down. A lot faster than I would have expected. And now today, for the first day, oversold. So now we're getting close to one of my first support areas. And frankly, there's a chance it could get into it and then turn up today or the next day or two and be in oversold condition. I think that's going to happen. I doubt that it's going to, in this particular drive to the downside, I don't think it's going to get way down here. I think it's going to bounce off of this one, the support area first, and a pretty good bounce at that. This is just a great one reversal day, pick the top, ER1 overnight, still short, profit next day, more profit, more profit, more profit, more profit, and today more profit. None of these highs are higher than previous day's high. All the closes are lower than previous days. Well, frankly, even the previous day's low. Wow. Textbook. Next. Platinum's not doing the same thing. It did have a bullish engulfing last week. I mentioned it, and it did bounce a little bit. I think that's over. It's getting pulled down by the other precious metals. So I'm looking for a test of probably, I don't know, the previous lows, somewhere around 843 to maybe a little bit higher than that before a bounce. High-grade copper, don't care. Between a rock and a hard spot. No particular trend at the moment. Next, soybeans. We got the bottom on Thursday. I screamed bloody murder when I saw this. It's very much like this last one, which we had on October 12th. So I'm looking for more of a rally. It's out of a support area and oversold conditions with a bullish engulfing ER green buy signal. Now a new high since last Thursday, and we're on our way to 1390s. Next, soybean oil starting to go sideways a lot since our great previous short position. Pick the high of the move on a double top. We got the second high, and down we go. And the minimum downside objective on that head and shoulder top, which I detailed during its life, was 50, and we got down to, I don't know, what was the low? 47.94, 48, a little below 50, and here we are bouncing back and forth. I'll wait for another comment. Soybean meal in support, trying to bounce, trying to hold, kind of between a rock and a hard spot again, and I'll pass on comments. Corn, we got the bottom of the move on 1129. Today is a down day and making minor new lows for a few days. Not good. Our stop is protecting a small profit, but it's not hit. And maybe it'll all turn around and start to make new highs real soon. Otherwise, we'll have a small profitable trade. Next, wheat. Got oversold on one single day, rallied much better than I would have expected into resistance, overbought, and has turned down. So what can I say? Longer term bear trend, of course, in wheat, absolutely. And we did catch the historic high, the beginning of the war, back on March 8th, 22, with a bearish engulfing ERCL sell signal. Another one that worked fantastically May 24th of 22. So I'm bearish. You know that for quite a long time in wheat and corn, and looking for a test of the previous lows and probably a new low. Next, live cattle got oversold, is bouncing again. I can't believe this. This is 4 times in a row now. It's doing its stair step down affair. Oversold, bounced to resistance, stopped, made new lows, oversold, bounced to resistance, stopped, made new lows, oversold, bounced to resistance, stopped, and got oversold. This time, I think it's a little bit more important because it's a lot more profound, the level that it got down to. So maybe we're going to see a little bit more of a bounce this time than before. Next chart. Live hogs. Outside down day, bearish engulfing, but we're nowhere near overbought, so no signal other than a Japanese candlestick bearish engulfing, implying that we're going to see lower lows, excuse me, than the current day's low. And that means, hey, new lows to move down, and probably down to 57 from 65. Yeah. Next. OJ. Here's something brand new. We had a bearish engulfing in orange juice that worked tremendously for a few days, October 31st. Now we have another bearish engulfing on another top at higher levels on November 12th, and a move down relatively, but not that accurate, relatively close to the previous break low. So it creates a line across the bottoms, these two lows, that is upward slanted slightly. You know what I'm getting at. During the next few days, we will have the correct timing for the possibility of a last shoulder high on a head and shoulder top, my favorite pattern, which I think is actually December 13th, Wednesday of this week. So if it is approximately at 396, yeah, that'll do very nicely on Wednesday, and we see some sort of a turning back down again move in the price action, I can't help it. I see these things coming in advance. I've seen many hundreds, probably thousands of head and shoulders of all duration. One of them was 10 years in the size, in the making, and others that were 5-10 minutes. So here we go. Maybe another one. Next chart. Cocoa could have a bearish engulfing today, and it's maybe having a little bit of a double top. A lot of trouble here. Can't really come to a conclusion at the moment. Have to go to tomorrow and come up with something. Next chart. Coffee, frankly, stronger than I would have thought. I kind of expected it to drop off and make new lows for a week or more today, and it certainly did not do that, and is right back up to the beginning of the resistance area again, and that could stop it. No comment. Let's see what happens next. Sugar to sweet, support didn't hold, crashed all the way down to previous lows back here on June 29th of this year. And if it breaks on a closing basis below that level of 2210, then I think it's going to drop off a lot more. A lot more. Probably in the ballpark of 17. Next, cotton. Rocking a hard spot, trying to come back up to the same resistance area on this rally for the next week or two. I think that is reasonable to expect. And back to the E-mini. So nothing new here. A little bit more strength. I'm pointing out the spider is now a little more than a point higher, 1.3. Also, the DIA is the same. And the QQQs are up 3 points. Waiting for that turning point back down again on the stock market indexes. You guys have a great day. Profitable trading to you.